7:16. Okay, there's some renewed optimism on Wall Street since the Dow hit 13,000 for the third time in history yesterday. Some people say this is a stair step to bigger and better things for the economy as a whole. Others, of course, are warning that things have moved too far, too fast. Joe Krier, president of Krier Wealth Management, is here to talk about both points and give some thoughts on how to handle your own money in the wake of this I guess we could call it good news.
Yeah, it was a big day yesterday. Definitely a big day yesterday.
It was a big day. And why is that? Considering we've got gas prices, oil prices going up, we've got tensions in the Middle East. How did it get to 13,000?
Yeah, well, you know, just as far as yesterday alone, a couple of things happened. Like Home Depot came out with some good earnings, and China did some things to assure that their economy keeps cranking along, and you know, the latest Greek bailout package. So people just got a little more optimistic there. And
is it that, or is it that people are tired? People who have some money to invest are tired of the 1% yield they're getting on money market accounts.
Oh, that's definitely a factor, and that's one of the reasons we think there is a chance for the market to actually push through this and stay above it, because not only are bank savings rates and money market rates low, bonds are a little bit scary, and foreign investments are a little shakier than they have been in years past.
Well, the markets have been going up for a couple of months now, and Joe's put together this graphic to show us why that might be. And wow, is this a double-sided thing here? Europe has not imploded yet. That's why we're powered up to 13,000?
Pretty much, yeah. You know, and the fear was that Greece would go down, drag Europe down, and that would drag the U.S. into another recession. And we haven't seen it, so we've had a gradual recovery. Unemployment's come down some. And then the global stimulus, like I mentioned, China the other day, the U.K. is printing money, the U.S. is printing money. You know, there are some negative effects of that, but for now it's all about kind of kick-starting the world economy.
Let's go back to that first point. Europe has not imploded. Do people expect it to still?
Not as much. They're not as afraid as they were a few months ago, you know, and it's about a orderly default of Greek bonds rather than them just imploding and a bunch of people losing a lot of money all at once. In this case, it's Italian, French, Spanish banks losing money over a period of years rather than taking the big hit in, you know, 1 year.
You say we still have some headwinds to face in 2012. What are those?
Yeah, you know, don't get too excited here. There's a lot on our plate, and you know, we need to see unemployment get a lot better. The real rate that's stated is 8.3. A lot of people know that there's a bigger number than that out there. And of course, you guys have been reporting on oil going up $4 or $5. That could stop a growing economy. And we're going to see a lot of political stuff coming up. Tax breaks expiring, just a plethora of things coming out of Washington as we go through the year.
All right, so what does this mean for our pocketbooks? What should we be doing? Should we be adjusting our portfolios at all right now?
Well, I think it's a good time to stay the course, you know, and Americans have been paying down debt. Stay on that course. Don't give up on that. Let's get the balance sheet cleaned up first. Let's not get either too excited or too panicked, because it is going to be volatile. We saw some craziness last year. We'll see it this year. But this time around, we do have, you know, signs of life in the economy, and things are heading in the right direction. Not as fast as anyone wants, but they are going up.
Okay, Joe Krier, president of Krier Wealth Management. Thanks so much.
Thanks, Stacy.